So welcome back with basic concepts, national income. And in this we are going to do with net indirect tax. So what are these net indirect tax? These are indirect tax minus subsidies. So indirect taxes are not considered in national income. So it's just a small little concept that we are just going to do it fast. Here it is just for you to see. So just look at this. Yeah, so this is the topic of today, that is net indirect tax. Now what is this? It is a difference between indirect taxes and subsidies. Now let's define or find out what are indirect taxes. Now taxes which are imposed by the government on the production and sale of commodities are called indirect taxes. We call in our country now we call it the general goods and services taxes, GST. So we're talking about sales tax, excise duty, custom duty are some examples of indirect tax. So GST, goods and services tax, are the indirect tax that we consider. Now what they do is they tend to raise the price of goods. So GST, goods and services tax, they are indirect taxes, and they tend to raise the price of goods. And what are subsidies then? Okay, let me just talk about indirect taxes a little more. For example, when a producer produces a good, he uses factors of production, land, labor, capital, enterprise, and he pays them. So that is cost for him. Cost of production is giving or spending on or hiring or using their own factors of production, or all what he spends on making a commodity, that is land, labor, capital, enterprise. So what are indirect taxes? That is his cost of production. Now when the producer or the seller takes it to the market to sell it, which is his ultimate aim, then what happens is that the government taxes it, puts a few taxes on it. So these are what are the goods and services taxes, or these are the indirect taxes. So now we talk about subsidies. What are subsidies? Now these are cash grants which are given by the government to the enterprises for production of certain commodities. This could be to promote export of goods, or also sometimes to sell goods at prices lower than the market price. So in that case, a subsidy is granted to a producer or a firm. So in this case, what happens is that they reduce the market price of a commodity. Now, the difference between indirect taxes and subsidies is called net indirect taxes. So NIT is equal to IT minus S. What is the significance? The important thing is that these are used to differentiate between the concepts of market price and factor cost. So once again, let me reiterate what I've said before, that market price is the price at which the product is sold and purchased in the market. It includes indirect taxes and excludes subsidies. That is market price. So what is factor cost? It refers to all payments made by the firm to the factors of production for their contribution and the process of production. And from the viewpoint of producer, it is called factor cost. So market price includes indirect taxes and excludes subsidies. Therefore, market price is the sum total of factor cost plus net indirect tax. And that is market price. Now we're talking about factor cost. Again, it is the difference between market price and net indirect tax. Therefore, factor cost can be estimated from the market price as market price minus net indirect tax. Now an important question that we would like to find out is that why, after all, should indirect taxes be deducted from and subsidies added to market price? So conceptually, the value of domestic product, whether estimated at market price or at factor cost, should be identical. This is so because the final value of the goods and services, that is the market price, must be equal to the cost involved in their production, that is factor cost. However, the market value of goods and services is not the same thing as the earning of the factors of production. So that's the reason why indirect taxes are deducted. So why are indirect tax? The question arises is, why are the indirect taxes deducted? In the calculation of the domestic product, the value of goods and services at market price are taken into consideration, which includes indirect taxes. Therefore, the entire market price is not received by factors of production. Due to this reason, indirect taxes are deducted from market price for calculating the value of domestic product at factor cost. Now, why are subsidies deducted? What happens generally? Government provides subsidy, that is economic assistance, to the producers or distributor so that the commodity may be sold at lower price. In this case, market price becomes lower to what factor of production actually get, what the factors of production actually get. Hence, for calculating the actual factor income, subsidy amount is added to the market price. It should be clearly understood that both indirect tax and subsidies are transfer payments. Hence, they cannot be included in national income. They are only subtracted from and added to market price to obtain national income, which is always measured at factor cost. So basically, that is the importance of net indirect taxes. That is so important. So look at the significance as I've written here. So you can see that why is it important, what is factor cost, what is market price. So market price is whatever the commodity the producer has made after spending on factors of production, that is cost of production includes the cost of factors of production, that is known as factor cost, plus the net indirect taxes, indirect taxes minus subsidies. So with that, you can get a question as define net indirect taxes, what are indirect taxes, what is subsidies, why is it important.